Alright, this is the video for some Forex trading, news trading, the week ending 14th of the 8th, 2015. If we go over and have a look at the Forex Peace Army calendar, this sort of data here had quite a negative influence on the Aussie, even though that there was a little bit up. There's just negative news coming out of China over the weekend. So Monday slightly negative for the Aussie, but there is nothing to really trade on Monday. Account balance doesn't really do anything for the yen. It's not even considered a large one on the Forex Peace Army calendar. There's a few speeches here worth reading the news about, but not really worth trading. Same with the monthly report. Just listen in, follow what the news is saying. They will mention these speeches, but they're not meant to be market movers, and no real trade opportunities there. So then we get to Tuesday, the NAB business confidence. It does move a little bit. It would give a bit of a spike, and it is worth just a little trade on there. If you can get like a nice 10 pip take, then you'd be reasonably happy with that. Now, I don't know that FNG actually does it, but if it does, trade it on FNG with, you know, deviation of 2 or 3 or something like that. Go back and have a look at the history of it just to check that deviation. But I'd say a 2 or a 3 deviation for NAB business confidence on FNG would be quite good. Amazing EA, you can go for a small gap. Not much going on around it. Very quiet kind of news week in general. So not much going on. 40 gap. I'd only be going for a 10 pip take on it though. 15 pip stop loss on Amazing EA. Now, the overall kind of theme for this week will be leading into this news data. This news data here, core retail sales, this sort of stuff here, which if you look, is all quite positive coming out compared to what it was last time. It's all forecast to be good. So the idea is to sell off the weaker sort of currencies against the US and be buying the US really. So if you can get some negative data here, you really want to be going against the US. Obviously your other pairs, if it is quite positive, then you want to be going against New Zealand dollar and Canadian dollar. The Aussie had a bit of a rally last week due to some of the comments after the rate decision, kept the same. Some of the comments were a little bit less dovish. Don't expect it to keep going up, but it does give a little bit of strength against the weaker currencies. It rallied against US. It won't stay rallying against US. It will come back down, and that was the comments that they said. They basically said that the currency will work its way back down to where they want it, which is around 72. So I wouldn't be thinking the long-term sentiment's changed on the Aussie. It is still a weak, bearish sentiment on the Aussie. But you might be able to get some pips still with that little bit of strength that might still be going from last week against the Kiwi and against the Loonie. Now, the Zen economic statement, you can trade this. You want a big enough deviation, and you just got to be careful of the economic statement here. It does seem to be quite volatile. You will get spikes, so I probably wouldn't awesome indicate it, and if you are going to have a nice large gap on it, I'd FNG it on a deviation of like 2.5, and if both, so you can put in the FNG 2.5, maybe just a 10 pip gap, but if they're both in the same direction, and they're both, let's say, weak, and you're in on the US, so you've sold euros, bought yourself some US, you could stay in for longer. You could try and rally it, ride it out until a nice sort of either resistance line or a nice pivot point, or your fib line, anything like that. Once you're in the trade, just have a bit of a look. If they're both in the right direction, they're both negative, is really what we're looking for with the US strength. You'll get a bit more out of it. You then can take the time once FNG's got you into the trade nice and early, with a large deviation. You've got a bit of that, at least a bit of that initial downwards spike. Then you can really have a look at your chart and check out where your stop loss and take profit should be. The large deviation, both same direction, and then set your stop loss and stuff yourself. Have it there for like a 10, 15 anyway, or probably a 10, just in case you get a spike. This is negative, but you reckon you might just get the 10 pips, so you're lucky to have something in there anyway. But if you're nice and quick, have two screens up, have this one, and then you can see you can actually just quickly make your take profit a little bit bigger, because you know that you've got a large deviation, same direction. We'll move on to Wednesday. Westpac consumer sentiment, it moves about the same as the NAB business confidence, so pretty much same settings. You can go for a 40 gap. There's not that much around. The hourly earnings you want to be out by, or at least have like a trailer. If you've got some money here, you at least want to lock it in, so move your stop loss so above where you bought it from, just in case this jumps down and starts going the other way. So if you want to be trading this one, which I probably will be as well, I'll do a small gap on amazing. I'll then do a 10 pip take, a 15 pip stop loss, but I'd also use the function of locking in some profit, just so if I hit that hourly earnings and I still haven't reached my take profit, I have locked in just something there, just in case this goes the opposite way and starts rallying the other way. For the week, I really am looking at hopefully selling the Aussie from its rally last week into some nice strong US data. So that is the plan. I really think that rally from the Aussie will be over, especially against the US. So selling the Aussie could be a good one this week. So I'm really looking for negative sort of data, just a negative theme throughout would be nice. Industrial production, it's the same sort of thing. You want negative, negative, negative. If this comes out negative, then it gives some good selling opportunities. Now there's a bit going on here, so you want a larger gap, even though it is the Asian session still. The Euro session will be starting in 30 minutes, well it does in Germany. An hour and a half after that is when the London session will open up, but you want a large enough gap, so 70, 80, which is quite large for the Asian session, and it's just to get you out of these whipsaws that might be happening around here. And I'd only be trading with sentiment, hopefully negative, from what the Aussie's been doing the day before and the Westpac consumer sentiment. So hopefully negative, negative, and if it's negative here, still have a large gap on there just to get rid of any whipsaws from the other news. And then you're probably looking at 10, 15 sort of take. And if it is a large enough sort of, if all of these are negative, everything's negative, negative, you can stay in it a bit longer. If you've got a nice low lot size and you've got a little bit of flexibility, you can, this sort of news here isn't going to move the market too much. You can stay in for a long time, all the way up to the core retail sales. So selling the Aussie into this news here. So you do need a low lot size if you're going to trade after this. So you can scalp these guys sort of ones, Westpac, NAB. But if they're all negative, you can scalp this, but you also can have a longer position if everything's looking negative and trading it into here, which would be quite a nice trade, but everything needs to fall into place for that. Now, the GBP sort of one here, it's very whipsawish. You will get large spikes in directions. Even though this guy's only at impact 3, the average earnings index, if we look here, I bet it's a red average earnings index. It's one that they're looking at now. It is a high impact one. It is important. So it's one that you really should be looking at. And same with the unemployment rate. Even though in the US it's not that big of a deal because it comes out weekly, the unemployment rate, I'm pretty sure for the UK is monthly. Yeah, so that only comes out monthly, where in the US it comes out weekly. So the unemployment rate is a lot more of an impact. So this one here. So if you're gonna indicator, do about an 80 gap. Only go for a 10 pip take, 15 pip stop loss. You can FNG on a large deviation for unemployment rate, but you really have to be careful that if average earnings comes out in the opposite direction, that you just close the trade. Don't risk being in there too long. Don't risk it coming back because the unemployment rate was such a large deviation. If average earnings, let's say the unemployment rate, you get a 0.2 or 0.4. Let's say you get a 0.4 reduction. So it goes down to 5.2, which it won't because that's a large deviation. If you've got a similar sort of thing with average earnings, like a larger deviation going the other way, it will counteract. You won't be able to tell which way that is really going to go. It will spike, it will go all over the place, and it would be reasonably hard to trade. So just be careful, make sure your gap's big, and if you're watching it, if they're all in the same direction, then that's great. That's why you have a large gap on a maze, because it will spike anyway. It will go for a fair while if all these are in the right direction. So if you've got your maze on there, that's great. If you're using FNG, I'd probably recommend not using FNG. Actually, I wouldn't, because basically a large deviation here and a large deviation here, if they're the opposite way around, you're just going to screw yourself over. So a maze with a large gap, and if they're all in the right direction, then that's perfect. It should hit it. And against the US, negative against the US would be great. And if the Aussie's doing what we're hoping this week, getting weaker, buying it against the Aussie, New Zealand, Canada, those sort of ones is a good deal, a good one to do. You can manual trade this quite nicely as well. If you wait for the actual announcements, you see it, you manual trade it. They're not huge, high impact on the calendar. There's no signals, but it is something that the pound are looking at. An average earnings index is quite a large one. You can trade the jolts or not. I have before, but if you're going to, just a small take, so do your 10 pip take or something like that on a maze. That's you've hit it a few times, but it just wasn't really triggering that much. So that's how I'll do that one. Now I'm not trading the final CPI. Final CPI does nothing. It's not saying a high impact, which probably is, but you've got 3 lots. You've got your preliminary one, which that's the one that actually sort of comes out and changes. And then you've got, there's no core, so for the euro you've got your preliminary, slightly different. Final's always the forecast one. It's just always what the actual from the prelim is, goes into the forecast, and then the final is that. So if you go back through history, oh, there's a final, I lied. There you go, there's an actual final that has changed. but very rarely will your final be any different to what was forecast. So, and if it is, it's only a small one. So I mean, you could have a FNG on there for any deviation. You might get lucky and it might deviate, but generally it doesn't. Now this is the kind of news for the week that I'll be looking at. The core retail sales. Now retail sales, core retail sales and retail sales generally follow each other. So if core retail sales come out positive, retail sales will also come out positive. So you can FNG it and you can amaze it. So you have both on there. So FNG, I would actually follow the signal for this guy. Maybe not with the currency pair that you're pairing against. I would pair it against what's been happening through here. So if there's positive here, you might be able to sell off the US. And you could actually sell the US because it would have rallied into this positive data here. So by now it should already be quite, not overbought, but it would have been people would have been buying it up. So you do have some room to shoot it back down on a nice spike if this is some positive data, or if there's any positive news coming out and the sentiment on a currency is quite strong. But generally you'll be looking at buying it. You're looking for positive data, some nice deviation on FNG, and that's pretty much what I'll be doing. You'd still want a 70 gap because it is the crossover between London and US. It will be moving a fair bit, so just you got to be careful of spikes. So a 70 gap. On the negative side, you want to probably take a 10 pip take, 15 pip stop loss on negative. On positive, you can take a 15 and a 20 on stop loss if it is positive. You've probably got more way to move on the positive because everyone's waiting for the positive data. And FNG, if it's a nice large deviation, you can probably hang around there for a bit longer. Now, retail sales, only impact 4, but if you go back and look at the history of retail sales for New Zealand, it moves a fair bit. You know, you could be looking at 20 pips sort of move, but once you take in your gap into consideration, things like that, it's not, and slippage, spreads, all that sort of stuff, it doesn't end up being a 20 pip sort of average. Once you're taking your spread, slippage, and your general gap on a maze, you're probably looking at about 10 pip. So I would amaze it with a 40 gap, 10 pip take, 15 stop loss on negative and on positive. It's generally big enough to move the market, unless you've had all negative coming out. There's not that much New Zealand news coming out this week, so you're probably right to get away with both directions, negative and a positive. And obviously if this is positive, then that would be a nice little trade here. It's meant to be coming out a hell of a lot of negative, so a nice one here would be buying US on FNG with a nice deviation on core retail sales, and then letting it run into the New Zealand retail sales here. You will make money off that one if it all works out in that direction. So a nice positive core retail sales into a nice negative, well, a lot negative data retail sales. Now, last one I'm looking at the US PPI. That does move the market. You gotta be careful because a core PPI and PPI should come out around about the same direction. Manufacturing sales, it is reasonably good. Big enough news for Canada, but because the PPI US data is a lot, overshadows it basically. So I'm not going to trade this because I think the US dollar is going to control what other currencies are doing a bit too much to judge it. But if you were going to, don't trade it against something like the yen that follows the US a lot. The Canadian dollar follows the US a fair bit as well. So it's got to be careful when you trade it. With the PPI, I'll be going with the sentiment that we've got from here, trading with that direction. If it's negative or positive, by the time you get here, you should be able to get a few more pips in the negative or positive direction with it. I'd still have about a 70 gap just because it should be a bit of spiking going on. 70-80 gap. I'd only really be going for a 10 pip take and a 15 pip stop loss, and trying to trade with the sentiment from here. This guy here doesn't really move the market. You're getting late into a Friday, people are closing their positions, so you're not really going to get too much movement there. That's it for the week. So really, only really about 8 trading opportunities, but with 8 trading opportunities you can easily get your 10-15% increase on your account balance. So just kind of work it out for your risk. Try and work it out for how much you want to be growing your account, and really only be trying to risk 2, 3, 5% of your account per trade, and risk reward 1-to-1. So if you can take 2, 3, 5% take, then you should be able to easily get to your 10-15% increase on your account balance. So good luck trading. Any questions, guys, then you can message below the video, and those of you that are doing the training, you can obviously just message or give us a buzz on my phone. All the best.